Well, Saudi Arabia's oil policy is very important for the global oil market. This year, Saudi Arabia has increased its oil production to record levels, and it's re-established itself as the largest crude oil producer in the world. Well, Saudi Arabia has increased its government spending quite sharply in recent years, and this has meant that the break-even oil price, that is the oil price that's needed to balance the budget, has increased to over $100 a barrel. The government is running a very large budget deficit, and we're projecting that deficit will be about 20% of GDP this year. Now, the good news is that the government has been able to build up substantial deposits in the banking system and has paid its debt down to very low levels. So this means it can either run deposits down or issue new debt in response to the decline in oil prices rather than sharply cut back on government spending. However, if we look forward, a strong and sustained fiscal consolidation is going to be needed. If this doesn't happen, then the fiscal buffers that have been built up will be eroded very quickly and fiscal risks will rise. The government's been implementing many labour market reforms in recent years, and we're already seeing some effect from that. And if we look over the last couple of years, we see stronger growth of Saudi employment in the private sector, stronger growth than we're seeing for the non-Saudis. But there's still some other stuff to do. One of the things that hasn't been tackled yet is the relative attractiveness of public sector versus private sector employment, particularly for the lower skilled. And we also think further efforts are needed in terms of diversifying the economy away from oil to create high-paying, high-productivity jobs in the non-oil traded sector.